As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a very special returning guest tonight, David Morgan, founder of The Morgan Report and well-known guru and consultant, speaker and writer on the silver and precious metals markets, is here with us tonight again on Reluctant Preppers. Thank you for joining us again, David.
Donegan, it's a pleasure. Thank you.
We've been watching with great interest the precious metals action over the past quarter as gold made a dramatic move at the beginning of the year. And when we spoke with you last, you specifically said you were waiting for a follow-through signal from silver. And we're following up with you to see if you could give us an update on, are you seeing the follow-through signal on silver that helps you to have confidence that precious metals have put in the bottom and are poised for further upward moves, or is that not yet in the cards?
Yes. By my work, we did get the confirmation, and it happened in the month of April. And for our website members, I give them this look over my shoulder service. And I've done this for years, actually. And I said, looks like it's going to happen. If we get 3 closes above this level, you can go ahead and go long. Now, we do a lot more than trading, and I basically don't advocate anyone to trade in the futures market. But for those that like to see how it's done or how I do it, I do let them see, and I talk them through it. So we did get those 3 days in a row above the level I specified, and then we went from that level about $2 higher. And I just put out another video for the website members stating that I thought that this $18 level was probably it for a while because of a lot of things. The sentiment's getting a little bit too strong, and also this commitment of traders that's not that accurate as a timing tool. It used to be actually a fairly good timing tool, but that was before the days of the ETF. So we have to go back in the history, quite a ways actually now. To remember the days where there wasn't, there wasn't a silver ETF. Regardless, based on my work, I said I think 18's about it. So far, I've been right 2 days in a row. We'll see. But from a long-term investing perspective, buying silver under the $20 level is an excellent opportunity for anyone. That doesn't mean that we're not going to go back into the 16 level and possibly the 15, but I think trading in the 13 levels, I don't think that's going to happen again. I think that the bottom is definitely in for both the metals now that silver's confirmed gold, and I'm looking for brighter times ahead.
When we've spoken with Bill Murphy from GATA.org, the Gold Antitrust Action Committee, or we've also spoken with Bick Swear, we've spoken with others, there's been quite an agreement among many of the people that have appeared on our channel that the markets, the precious metals markets, have been so manipulated and suppressed and intervened in that the natural price discovery mechanism of a free market has been completely out of whack, has been completely broken. So when you look for clues of likely moves one way or the other in precious metals, you started to reveal here, you have to rely on things other than the simple technicals or something if the standard price discovery mechanisms are broken. Or are you seeing actually a naturalizing or some of the dysfunction being removed because of the amount of popular interest that's happening? Do you see any signs that popular interest is going to overwhelm the manipulation anytime soon?
I have 2 questions there, but the first one is, do I use technicals to trade? The answer is yes and no. Basically, I do look at the technical work that's preceded, me, and a lot of great people have come up with a lot of ideas. I've got it back down to the very, very basics. And the way I trade is I let the market tell me what to do. So what I just outlined a moment ago, if and only if the market is at this level and it completes 3 days in a row and it's on this much volume, then and only then could you, get in the market on let's say, I hate to use the word short term because I'm not a short term trader. I'm a position trader. I mean, if you go back into history, I got in at $19 and got out at 48. And, one good commodity trade could make up for a lot of penny stocks that went to zero, and I don't. So the point I'm making is that the way I trade is technically based, but market determined. And that's a very, very important thing to know. So the other part, the second half of the question was, will the natural flow of investor funds eventually take over the market from the physical side? The answer is yes. We're actually seeing some signs of that right now. And I don't want to hang my hat on the Shanghai Gold Exchange as being it. That's it. Oh, the Chinese are in there and it's a physical market and it's going to run over the bad guys. And, it's going to be a help, but I don't think it's going to be the one and only determining factor. I think it's going to definitely have influence in the market. But there's a lot of other things going on behind the scenes. And the last one, really, that I've written about, and I'm not seeing too many others, is the currency markets are what I call the banker's last vestige of hope, which means that these bankers want everyone to think that one currency is better than another currency, or that by trading currencies or moving in and out of currencies, it actually shows some type of, better growth in one part of the world than another. There might have been a time in the past where that actually had some merit, but you could throw all of that out the window. It's absolute nonsense at this point in our monetary history. But again, repeat myself, it's the banker's last vestige of hope, because if everyone starts playing the currency game and, I got to get out of the dollar and get into the yen, and I've got to go long the euro and short the dollar, it's the biggest market out there. The currency flows are the biggest markets. So it keeps everyone distracted from the reality that they're all based on the fiction that they're worth something. So that's an elaborate answer, but the basics are very simple. That is, that something that's worth nothing will eventually, the market will determine that at some point. And the way markets move, it isn't a determination by 100% of the population. It's a determination by enough of the population that they start to make an adjustment. That adjustment will be a run to gold and subsequently a run to silver to go right along with it. And because that's almost a fact, it's been a fact in monetary history, and I believe it will be proven to be a fact in the not too distant future, you will see all currencies basically go down against gold and silver. And so this is what's ahead of us. There is no way out. If printing more debt, creating more debt, and stimulating the economies, which is what the central banks around the globe really have been trying to do since the 2008 financial crisis. If that worked, we'd be out of it by now. I mean, here we are 8 years later. I mean, if any of that worked, even to a modicum of actual factual, benefit, it would be obvious. But it's obvious that it's not working. And so we're in the corner where we, meaning the world's global economy based on this central banker paradigm that you can print wealth and you can't. And the world at large is waking up to this fact in so many ways. And this is the problem.
As the world wakes up and as people become aware that their store of wealth cannot be in debt-based fiat currencies, you've spoken in the past. When I saw you as the keynote speaker at the Liberty Mastermind Symposium, you gave a clue of an indication of how much physical, investable, above-ground silver is really available compared to the world's population, and it was some fraction of an ounce. That was 3 years ago now, and I don't know if things have changed one way or the other in that picture, but could you give us basically a fundamental view of the actual above-ground supply of investable silver versus gold, and that'll give us an understanding compared to the world's populations, what amount is available as people awaken on a broader basis?
Right now, the investable coin market, which includes all government minted coins and all privately minted coins, which are referred to as silver rounds, is roughly 1 billion ounces. And that's all investment grade silver, obviously. And the other half is commercial bars, which a lot of those commercial bars are held for investment purposes. I mean, the SLV, the physical silver trust from Sprott Asset Management, what's held in the Zurich Continental Bank, what's held in Central Fund of Canada, what's held at Bullion Management Group in Canada, all that all those commercial bars are investment bars. In other words, they're held for investment, even though they're commercial bars. And that adds to roughly another billion ounces. So right now, you've got roughly 2 billion ounces of investment grade silver. And on the gold side, you've got roughly 5 billion ounces of investment grade gold. So there's actually less investment grade silver than gold. But let me be clear, the ratio out of the ground is actually about 10 to 1. And that's a good round number to use. It's really more like 9, but let's go with 10. We can do the math in our heads. So if you go to how much gold has been mined from all of recorded history, you would see it's roughly 5 or 6 billion ounces. And 6 is probably a little bit better number. And there's been 10 times as much silver mined, which is 60 billion ounces. However, coming back to what you asked me, what's the investable amount of silver? And the answer is about 2 billion ounces. Now, the 60 billion ounces, probably half of it's just disappeared, meaning it's in landfills or that type of thing where it's uneconomical to never be retrieved. And a lot of the remaining silver is in applications that are very unlikely to come back into the market. For example, solar reflections on window panes throughout all the skyscrapers in all of the world. I mean, not every skyscraper uses a silver type of film, but many do. All I'm saying is you've got a micron's worth of silver across a plate glass window that may be 12 feet by 9 feet or something, times how many panes on how many skyscrapers. So you get the idea. Same thing with some of the artwork and that type of thing. I mean, some of it could be melted down, but there's a great deal that won't. So the idea being, I don't want to mislead anyone, because sometimes these issues come up at conferences, or usually at conferences, and it's, oh my goodness, I thought there was less silver than gold, like out of the ground. And it's like, oh no. And then of course, this is my pet peeve, I say it every time I do your show, is everyone says it's a 16-to-1 ratio, which is absolutely, totally, completely wrong. And I don't mind telling everybody wrong, and I don't like to use the word wrong too often, but they're wrong. The highest ratio that silver's ever come out of the ground to gold was about a 12-to-1 ratio, and that was back in the 13th century. And in fact, what's interesting about that is that was the ratio that the monetary system placed on it. They placed the natural ratio of 12-to-1 on 12 ounces of silver equal 1 ounce of gold. And that ratio held, the natural ratio held as the monetary ratio for hundreds and hundreds and hundreds of years. And it's only been in the late 1800s, during the crime of the 1873 shenanigans, that you've seen the silver-gold ratio get way, way far away from what I call the natural or the monetary ratio. Now, the 16-to-1 ratio is the monetary ratio. It was an edict by Sir Isaac Newton back when he put the Bank of England back on the gold standard. And the actual ratio he submitted was 15.5 ounces to 1. But the ratio should be free-floating. The monetary ratio is set by man and is not the natural ratio. So now that I got that over with, I'm sure you've got some more questions.
So where does that leave people who have been sitting on the sidelines or waiting for a clear time when it's the right time for them, if they've been hesitating to get into accumulating precious metals, or if they don't even know how, because they've never done it before? Most people haven't, and most people weren't taught that. Although, ironically, when we were our generation, when we were children, we all had silver in our pockets because that's what our coins were. But in recent decades, that's been taken away from us. And if people want to get back to the days of real money, sound money, is this, in your opinion, as they're doing their diligence, a time of better or worse risk position than, say, over the past several years when it seemed to be dropping and there seemed to be no bottom in sight. Everybody was wondering, when is the fallout going to end?
Well, you're always better off buying after bottom has been formed. And that can be tricky. I mean, I called incorrectly bottom at 1817. It was a spike low, had all the ideal conditions for silver as I've watched it for 40 years. And I was correct. At 1817 was an intraday low, and that low held for months. Only 14 months later, it went below that level. And now we're just testing that level, and we've backed off of it. Regardless, if you can buy a commodity under the cost of production and have some patience, you'll do well. And that's basically where we are right now. And I would really recommend everyone look at what I give away for free, because I give a lot for free. And if you go to themorganreport.com, on the right-hand side, there is a report you can get for free. I wrote it myself. I think it's about 12 pages long. It's called Riches and Resources. There's no obligation. But in that report, I give you a lot of things. And one of the things I give you is the opportunity to stack silver or gold, palladium for that matter, but primarily silver stacking. And you could set up a program where you can purchase silver month to month to month to month, and it's very flexible as well. You could stop it for 3 months and then change the price, or not change the price, but change the amount that you're investing, that type of thing. And what's really cool about it is that they have an affiliate program that doesn't cost you anything. Just by becoming a part of this website, I guess, they allow you to be an affiliate if you choose to. And it's the best affiliate program out there. I mean, basically, you can sign up and start stacking silver at $50 a month and maybe make $200 a month just recommending the same thing to your friends. And it's paid in precious metals. So it's a pretty cool way to go for the smaller investor. I mean, this isn't something I recommend to, an investment bank, but it is certainly a great way for people to get started, especially, as you said, new people that are kind of afraid what to do. And it obeys one of my 10 rules of silver investing. Start small and see how it goes, see how it works, see how it's packaged, see how the people treat you and all that stuff. So, it's something that I am affiliated with. I do have it myself. I do contribute every month, and I have recommended it. And a lot of people, my girlfriend, my sister, my webmaster, a lot of people that know me are with this program, and they're very happy with it.
What forms of silver can be accumulated under that program? Because the reason I'm asking is we were talking with some family members over the past weekend, and they were completely unfamiliar with how and where to purchase silver. They were very wary of potential scams and potential for, something that isn't genuine. And they said, how do you know who to trust? How do you know you're getting the right thing? So what forms of silver are available under this program? And do you gain physical possession of this, or is it stored for you? How does that work?
Yeah, it's physical possession. You can store if you wish, which I don't recommend, but you could. And it's a bit unique, and hopefully I'll be clear on this. And I didn't set it up, but friends of mine did. The way that it works is when you make your silver purchase, you will be buying in at the raw form. You'll be buying a commercial bar. So you'll buy it with an extremely low markup. So let's say silver is at $18 even, and you put in an order on that day, you would be buying silver for something like $18.15 or something. Very modest. However, when you go to get your silver delivered to your front door, your office, or wherever, then you take that silver that you've bought in the commercial bar form and either take it in a commercial bar, which very few people are going to do, who wants 1,000 ounces of silver in that form, or you convert it, and that's where you choose. And the choice is almost open-ended. It could be American Eagle, it could be Canadian Maple Leaf, Australian Kangaroo. It could be a generic round that they produce themselves, or other common rounds. It could be 1-ounce wafers, 5-ounce bars, 10-ounce bars. junk silver, which is 1964 older U.S. silver coins, and probably 2 or 3 other forms. But you also are charged, like every other dealer would charge you, the difference between buying raw silver that hasn't been manufactured into some form that's, let's say, more sought after as investment grade silver, and you're charged accordingly. So, for example, the $18 level. If you are a broker dealer that has an association with the Treasury, you can buy Silver Eagles at something like, it varies, by the way, but something like $2.50 over the price of silver. So if you were buying Silver Eagles from the mint, and you were allowed to, very few are, because you have to buy in the millions of dollars at a time, you would be buying at $20.50 if I did my arithmetic. So 18 plus 250, so it'd be 20.50. So when you're with this program, you'd be getting delivery of silver at about 21.25. It'd be like a 75-cent markup above what the broker dealer would have. I should say the dealer had. And that's very, very standard in the industry. So the prices are right along with everybody. What does annoy some people, and I don't blame them really, because the way it's bought is it's bought in raw form and then it's converted at the time that you draw it out. But it is yours. It does get delivered to you. Or again, you could store it, which again, I don't recommend, but, and you could get just about any form of silver you could think of.
If we could return one more time to the overall market conditions, the stock markets, which a lot of our guests have talked about being artificially inflated over the past decade by easy money policies by the Fed, have, after holding record highs over the past a year or so, have come down somewhat. But compared to the where they are versus their highs, compared to where precious metals are versus their highs of a few years back, does it make sense that people should look into possibly rebalancing their portfolio from some stock gains into precious metals if they don't have any precious metals portion of their portfolio?
Absolutely. I mean, one of my mentors, and I got to know him a little better personally, before he passed away, was Harry Brown, and that's Harry Brown with an E. And if you want to learn about him, just type in Harry Brown, Browne, libertarian candidate for president of the United States, and I'm sure that'll bring up the right Harry Brown. He started this idea of a permanent portfolio, and a permanent portfolio is broken down between stocks, bonds, precious metals, 3 or 4 other things. And what you did was you just annually rebalanced the portfolio. So you would have certain asset allocations, for example, 30% in the general equity market. And then after a year's time, you would look at it. And if it turned out to be 50%, because you had a huge increase in your stock portfolio, then you bring it back down to 30%. So you would sell off till you were back down to the 30%. You would take those proceeds and you would look at where you were underinvested. And let's say it was precious metals because they had deteriorated price-wise that same year. And you would build that back up. And it sounded almost too good to be true or too simple, but it actually works very, very well. And it's a tribute to him. Terry Coxon took over. There's a permanent portfolio fund that you can do it that way. But I said all that to say this. Yes, there is money moving into the precious metals right now, and some of it is from people that either left the market for a long time or they're new buyers because they realize something that's as undervalued as the precious metals are at this time is a good place to be investing versus where the equity markets are currently.
Well, David, if people want to find more of your work, where should they go? And you said you've got both free information and subscription information, so could you tell us about both of those?
You bet. Just go to themorganreport.com. Be sure to give us a first name and your best email address. It's double opt-in, so I'll just ask you, are you? Is your email valid? And you say yes, and one more click of the mouse, you will get the Riches and Resources Report, which is quite valuable, actually. I mean, I'm saying that I wrote it, but I did really try to give a lot of information and opportunities. I mean, that affiliate program, which I think is really quite amazing, is there for you. On the Morgan Report itself, I mean, I've said enough during these interviews that, most people have enough understanding that they probably don't need more. But there's always those people that do, because they're really interested in this market. They really want to do well through the equity market, and they also want to do well through timing. They also want to look at the commodity side, and they basically want the inside track of what's going on in the global economy, the precious metals, and the resource sector in general. And those are people that subscribe to the Morgan Report. And one thing that I give them that very few do is you get a guaranteed response to your email inquiry. So if you have a question for me, you send it, and you are guaranteed you'll get an answer. Another thing is that we actually take video cameras with us on most of the resource conferences or any of the investment shows that I do, because they're not always resource conferences. In fact, the one I'm doing here in Las Vegas is not a resource conference. But regardless, we take a camera and we put those up for our website members. So if we're going on a mining trip, we might be, let's say in South America somewhere, we would take a film, put it up for the website members. I'm at a conference and the promoter allows us to film it. We'll film it. And so we really try our best to give a great deal for the value. But that's all on the sales page. I mean, if you're interested, you can watch the sales video. And that's a pretty good explanation of what you get. And then you'll make a determination based on everything you see, if it's valuable to you or if it's not.
Any last thoughts before we let you go for our viewers?
Yeah, I think the last thought is cheer up. The world is getting darker, but the metals are getting brighter, and nothing goes to zero. So, I mean, even the dollar will never hit absolute zero, I don't think. It'll be a reset before absolute zero. So the point I'm trying to make is, be of good cheer, live your life fully and completely, and realize money is only part of it, but a very important part of it. And if you don't understand what money is, you're listening to the wrong program.
So, David Morgan, founder of the Morgan Report and silver investor, very grateful for your presence here and your wisdom that you share with us on Reluctant Preppers. Thanks for being on our corner.
No, thank you so much. I appreciate you.